Morning, Steve Freed in Chicago with the morning grain comments. Prices are a little bit higher. Yesterday we saw a little bit better tones in the beans and meal than what we've seen of late. Some people were talking about maybe better meal demand for the United States. I think there's 5 issues right now in which the market is trying to digest in the grains. Number one is weather. It looks like this weather pattern that was going to move across the southern plains Friday and Saturday looks a little lighter, especially in Kansas, than what we had thought earlier. So the question is, do we need to put all that 40 cents that we took off Kansas City prices back into the marketplace if they miss this rain event? Also on the weather front is that there's been a lot of talk about U.S. summer weather. I think the majority of people are looking for normal rains and cooler temperatures. This has something to do with the minimum solar activity. But as far as one group, they think El Nino is going to come back and we're going to have dry weather. Another group could see some dryness in the Midwest, but cool temperatures will allow us to have normal yields across the entire U.S. Midwest. So we're trying to figure out what all that means. Some people have gone through all the work of looking back in the 80s when we walked in the 4th of July and the weather changed to drought conditions unexpectedly. And they said that right now, it doesn't look like that's going to happen, but once we get back to El Nino, 2019 might be a dry summer, so we'll have to kind of watch that down the road. We're also watching trade issues and how much more push and pull there's going to be between the United States and China. There was one article talking about inside China. This trade war, the tariffs, could actually increase the cost to meal users in China, and they're actually seeing a reduction in their hog herd and what impact that might mean. There's also some talk that non-China buyers from Brazil might turn to the United States and buy from here. So we're trying to figure out also the U.S. crush, record high, but meal basis in the United States is soft, and the meal export demand hasn't picked up as much as people had thought. So can meal prices hold these levels if meal demand actually softens? We're also looking at the fact that the funds are still long beans, meal, corn, and short wheat and oil, and whether or not they hold those positions into the next 20 days as we look at U.S. planting conditions, as we look at U.S. winter wheat crop conditions, as we look at the May 10th USDA's first estimate of 18 and 19 supply and demand. So it might be a quiet 20 days, but after that, buckle up, and things could get pretty exciting in the grains. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.